There's a lot of confusion around tax brackets and tax rates, so I wanted to put together this video to help explain how it works. We have 7 different brackets, starting with the 10, 12, 22, 24, 32, 35, and topping out at 37. So what this is explaining to us is how much money we can make within a bracket before we jump to the next, and also at what rate we're taxed at within that bracket. Now the tops of each bracket will change from year to year. They're adjusted for inflation and the cost of living. So those will change, so you'll want to be sure you're looking at or referencing the specific year that you're trying to figure out. The next step will be taking our taxable income. So taxable income is income from all sources, less deductions, whether that's the standard deduction amount, which the government allows each year, or itemizing or adding up specific things like property taxes and mortgage interest, charitable donations, and maybe medical expenses, depending on your situation. So once I know the taxable income, I will then look to or reference a tax table. So in my example here, let's just say our our taxable income puts us in the 24% bracket. What that means is our last dollar falls or lands in the 24% bracket, meaning the next dollar I make, 24 cents on that will be taxed. Or if I make a charitable donation, if I'm itemizing, or a retirement contribution, 24 cents on that dollar will be tax savings. So this is where my last dollar lands. Interestingly though, that's not my total tax rate. You see, if you've ever been on a cruise or to a wedding or a ball where they stack the champagne glasses, making a champagne tower or waterfall, that's how this works. When they fill that top glass and it starts overflowing and then it drips down to the next glass and the next level and the next level, that's how this works too. You see, we're filling up the 10% bracket, filling up the 12% bracket, then the 22, and then whatever's excess or overflowing flows into the 24. So not every dollar is taxed at 24%. That's just where my last dollar falls, providing us with our tax bracket, also known as your marginal tax rate. Now another real important rate could be your effective tax rate. And you would know that by looking at your tax return, taking your total tax from last year, divided by your total income. Total tax divided by total income provides you with your effective tax rate. 2 different rates, calculated 2 different ways, but they're really important. These are 2 data points when we're doing tax planning and financial planning that we're looking to understand your situation and understand what makes the most sense for you in the future. So effective tax rate, marginal tax rate, found 2 different ways, but are really important. To take this to the next level, please look at the description to this video. We're going to be providing a free downloadable where you can take this information and now use it applying some tax strategies. If you need help with any of this, implementing it, talking through it, please reach out to us. We're happy to help you.